Now, being German, you can probably think that QE isn't exactly in our interest. To one extent, on the other extent, it's aiding a deflating euro and, of course, increasing our trading position yet again. Now, coming out of the strongest trading background in the last year, that's probably not necessary for the German market, but I think it's a pan-European issue. Germany at the moment is probably at its maximum capacity that it has been in the last 20, 30 years. We have max employment rates. We have the highest office employment rate historically. We have probably one of the lowest unemployment rates. So on the workforce side, Germany is doing very well. And they're actually spending money. Now that's a new thing in Germany as well. We don't tend to spend money. I always wonder what they actually do with it. Because they're not really getting any money back on the banking side either, on the savings side. But Germany tends to be historically a saving, low consumption, hard-working country, and that's probably one of the reasons for the stability of the markets as well. We don't have a speculative DNA driven by a federal system on the real estate side as well. Yeah? So you take apart and you don't have the dynamics of a centralized system, and you federalize that and tear that apart, which is historically seen obviously a consequence of 45, which is a good thing for the country as well. So you take away the dynamics of a centralized system, you put in a high employment rate, you take in a high savings account, and what you get is a very stable economy. QE, euro, volatilities, etc., probably gets the Germans more nervous than any other country in Europe. I don't know if that's a character trait or if it's it's probably more in the press than it is anywhere else. I think the first thing you read in the morning is Brexit, and the last thing you read at night is Putin and Brexit. Yeah, so everybody has nightmares in Germany at the moment. The Russians on the left and the Greeks on the south. It's just hence why they're probably spending more. Yeah? I don't know, but generally, I think it's a very positive thing. I think it's a very positive mood in Germany. Generally, it's not coming to the point of saturation, but it is a generally content, positive outview, which is a rare thing in Germany, yeah? Both on the economic side as on the normal employment side. And I think that's something that's driving the next generation outlook. I think it's there's a certain trust in macro, there's a certain trust in stability of politics. And I think that filters through into the real estate aspect as well, making it a stable, not dynamic, but that stable core product that I think any investment manager or portfolio manager should have in their portfolio, no matter which side of the investment spectrum of commercial real estate or residential we're looking at.
The US is less interested in Germany because of the low return environment that we have seen. So they are more looking, if they look elsewhere in the world, they're looking more to Asia and also to the UK. In terms of Asia, they are more used to lower returns and also have lower return expectations. So we see more money coming in from Asia than certainly from the US, and more money also from other European countries that can evaluate better the stability of the German market. So it's rather Europe and Asia than the US. But also we see first money from South America, from emerging markets. We see money, for example, from Brazil currently targeting the German market for the first time. So it's interesting sources of capital that's still at a low extent, but it's coming up.
I mean, I think the political situation at the moment in Europe, and also with regards to Russia is interesting to say the least. I think in Germany, what we definitely see is a lot more Germans buying properties, be it on the commercial side, also on the residential side. I mean, the risk of investing in Germany, I mean, it is a very stable environment. I mean, the non-volatility was a big point made already. We, for example, in the residential market, we have done a lot of prime residential, which is the least volatile, which over the last 50 years in good locations in Germany you have seen a stable growth. But in the student housing sector or secondary residential, there's still good returns to be made with a good risk profile.